stock market weekly chart review for August 22nd through August 26th. Let's talk about the S&P 500 and why we are looking at the S&P 500. The S&P 500 is made up of about 500 stocks. And you can look at the S&P 500 as a general measurement of what the overall stock market's doing. The reason why you want to do that is that whatever the overall stock market's doing, it'll put pressure either down or up or potentially sideways on a particular stock that you are looking to trade. So whatever the overall stock market's doing, and you can get an idea of what the overall stock market's doing by looking at the S&P 500, you can use that as an indication of what sort of pressure is going to be on a particular stock that you are interested in trading. Speaking of trading, at the end of this video, I'm going to give you links to free resources, a variety of free resources. And throughout this video, every little step of this video, if there's something that doesn't make sense to you, I want you to comment below and let me know specifically what it was that didn't make sense. So that way, one of two things, maybe more can happen, but at least one of two things. Number one, I can relook at what I said, and if I made a mistake, I can correct it. Number two, if I was correct in what I was saying, but I just didn't explain it eloquently enough, then that would be some good feedback for me to know how to deliver better content to you guys. Okay, is that cool with you guys? If it's cool with you, like this, hit that subscribe button so you can be part of this channel. As a reminder, at the end of this video, I'm going to give you links to a bunch of free resources, and throughout the course of this video, anytime something doesn't really make sense, you want more clarification, you think that I was inaccurate about something, you're better than at trading than I am, and you're going to help me out and correct me, please just comment in the video so we can both try to help each other. Now, let's look at the composition of the S&P 500. Now, we spoke about why it's good to look at the S&P 500 as a general proxy for the overall stock market. Well, the S&P 500 is made up of about 500 stocks. That's why they call it the S&P 500. And in fact, we're looking at this Fidelity website here. And in fact, these are the top 10 stock holdings of the S&P 500, which per Fidelity right now, Fidelity says there's 507 stocks in the S&P 500. So the top 10 stocks would be Apple, Microsoft, Amazon, Tesla, Google again, Berkshire Hathaway, United Health Group, Johnson & Johnson, and NVIDIA. Now, what we find about these top 10 stocks is only 3 of the 10 are not technology stocks. So that means 7 of 10 stocks are technology stocks, which would put us in a position to not be surprised when we're looking at sector exposure and we see that technology stocks make up the largest degree of exposure for the S&P 500. What does that mean? That means whatever the technology stocks are doing is going to have a massive impact on what the S&P 500 is doing. What the S&P 500 does as a proxy of the overall stock market is going to have a massive impact on what the individual stock you are looking at trading is going to do. If you don't know what a sector is something like this: technology stocks, real estate stocks, utilities, water, gas, whatever, electric, stuff like that. So similar type of things. You could look at all these different retail shops, right? That'd be like a retail sector. So with the largest weight, we're going to look at the top 4 with a little caveat that I'm going to explain to you in 1 second. Right? So we have the information technology making up 27.96%. Healthcare makes up 14.31%. Consumer discretionary, 11.49%. Now, real estate. Now, if you look down here, it says real estate. So we got real estate in two spots. In the last 3 to 4 videos on this weekly stock market weekly chart review, you'll see that this spot had been financials, and it was at roughly around the same amount. So there might be a little mix-up here. You can double check by clicking this link right here, and you can watch last week's stock market weekly chart review and look for yourself to see if that's pretty much the same number and what was going on there. But regardless, I have a solution that we're going to be covered either way. So we are going to continue to look at the financial sector, just in case it's a mistake. But I also pulled up a way to look at the real estate sector. And so how we do this is I have found correlating ETFs for each one of these different sectors. XLK is a technology ETF. XLV, healthcare ETF. XLY, consumer discretionary. XLRE, real estate. XLF, financials. And another reason to point out of why it's really good to stay up to date on what this portfolio composition is because a couple years ago, the main components to look at for ETFs of the S&P 500 was the semiconductors, small, medium, mid-cap stocks, and the financial stocks. The technology, besides semiconductors, wasn't even that much of weight. So over time, things shift around. So you stay up to date, make sure you know what the portfolio composition is, so you're watching the right sectors inside of the S&P 500 to give you a better idea of what the S&P 500 is going to do, so you have a better idea of what the overall stock market's doing, so you got a better idea of what your particular stock is doing, right? So let's get into looking at the S&P 500. Now, last Friday, Jerome Powell spoke at the Jackson Hole Symposium, and after that, woo boy, these stocks just crashed, cratered. We see the selling volume kind of picked up. Now, selling volume last week was there, but it picked up just a little bit more. So one thing we want to do, okay, we looked at the volume. Now let's look at this particular candle, right? It opened here, it closed here. It traded as high up here, but look at this. Look at down here. No wick at all. No little tail, no, nothing. So prices closed on the very low end of the trading range. Now, from last week's video, you'll see I talked about how this is in the upper 50% of the candle before it, right? But now this one, not only do we see the body, this opened up in definitely the lower 50% of the body, but we're really in the lower 50% of that bullish candle's trading range. In fact, we closed down here. There's a little bit of consolidation here, right? And if we look to the left, we see that that would make sense because price is kind of consolidated here, sort of did it here. Look to the left, it touched here. So somewhere in this 410, sort of 420, 410 range, right in there. And prices broke through here. So what might we expect? Where's going to be our next support and resistance? Maybe kind of in here, maybe in this 400 range. Definitely in this around 390. So we want to see if it gets around this 400, 390, especially around this 390. If it starts breaking through 390, then there's what is there? There's like this little bit around the 370, but it's sort of in the same range. Once we start getting in this 390, if we break that 390 area, we want to see what's happening. How quickly is it coming down to this 370? And if it's quickly coming down to that, what's it going to do when it hits around here in this 200-day moving average? So that's big picture, and let's break down the S&P 500 a little bit by looking at starting with the technology, since it's the highest weighted. We see a similar thing here, except for when we take a closer look, it's not really like that. I don't think that meaning. And we see that price is almost close to the very end of this trading range, except for there was just, you see a little bit of push up, but it's really looking bearish. Same, very similar thing, right? In this very low end of this bullish candle, it's in the bottom, broke through here. Now with this one though, we seem to have this little bit of a consolidation area right here at that, around that 139.88 area. So if prices break through here, this is kind of our next area, and similar to the S&P 500, you know, we got this 10 point range. We're going to kind of see what happens. We're going to see what happens here if it breaks in this 135, and from the 135 to 125, and if it does, it's probably going to come down here, test that, with our volume picking up, more volume, more selling coming in than last week, about a little bit less than 3 weeks ago. Those healthcare stocks, volume kind of about equal for last week, maybe a little bit higher than last week and a little bit lower than a week before, but for last 3 weeks it's been pretty similar. Here is our candle, and we see that last week we were above this 50-day moving average. Now we opened up right on the 50-day moving average, closed significantly below it, closed below this, all this consolidation here. That when we look over to the left more, this seemed to be a pretty significant, kind of significant zone of consolidation. Now, when we have something like that, it definitely can kind of work in ranges, but we see at the 130 there was something there. So now when it's above 130, 130 is going to act as like a floor or support for it. If it's below 130, 130 acts as like a ceiling or resistance for it. But it's a bit of a range with that. So it's kind of like 130 to 125, right? See how it kind of touches down here? Maybe there's varying levels. So sometimes it's good not to look at it as 100% black and white, but this little bit of a range. So let's see what happens. What's it going to do around this 125? Same thing with the other two stocks that we're looking at. If it breaks down this 125, there's really nothing right here. Like that's not really any sort of real looking like support. And if we come over to the left, we're going back all the way to when is this? Last year, sometime March, June of last year. Generally speaking, the older that support or resistance is, sometimes the kind of the weaker it is. Like it can still be there, but you know, the most current stuff is kind of, you can have a little more weight on it. We don't want to discredit anything, but we just want to understand sometimes the further away from it that it gets, it becomes a little, maybe you want to just be a little more careful with making a financial decision based on that, and look for some confirmation. So XLY are consumer discretionary. Consumer discretionary, we had like uptick, not much trading volume going on lately, but uptick in volume with, of course, the selling. And we see that you know, it's like really right here. We want to see around this 155. What's it going to do? It's going to hold up around this 155, or if it doesn't hold up around 155, you know, you basically going to be hitting probably going to be testing right in here. If it's breaking through here, we'll probably test kind of in this area. The real estate volume has been trickling off this month, right? So we got this week a little lower, week before, third week, fourth week, you know, fifth week. After this month, basically the whole month, the last 4 week trading weeks, have the volume on the real estate ETF has just been going down. And as far as looking to the left, we see it broke this consolidation right here. Now we're in this kind of second phase, but looking everything is looking bearish. Financials, a little bit lower volume, And here we are, right around, right in here. We got this consolidation, this area. So it seemed to be supporting it a little bit, but let's see what happens. You know, overall prediction for the S&P 500, I think we can expect some choppiness overall. Choppiness or some just massive selling. This sort of bull ride that was happening here, I think that is obviously done for a bit. We couldn't break this. So let's say for the next week to 2 weeks, what I'm personally doing is I'm going to continue selling covered call options on stocks I already own. I'm going to continue to sell those, and I'm going to sell those a little with the strike price being a little bit closer to the price that I purchased the stock at, just because I think right now there's a lot of downward pressure. And if I'm wrong about that and I get those stocks called away from me, those stocks, I'm still selecting a strike price that's higher than the price that I bought the stock for. So even though I would like to just kind of do some income harvesting for a little while, some premium harvesting, I would be okay with getting assigned and taking a capital gains and taking some premium, giving up those dividends for a while. Because the other thing that I'm doing, and I'll take that money and I'll fund it right back into selling cash secured put options, which I'm still doing on stocks that I want to acquire more of or that I want to build a first time position in. Now with selling the cash secured put options, I'm selling, like for example, I am not selling a cash secured put option on S&P 500, but just looking at this chart, if I was going to looking at this chart, you know, regardless of the price point, if I'm just looking at this chart and thinking during the next week to 3 weeks or whatever, where would I be selling? I'd probably be looking to sell past this 200-day moving average for the cash secured put options for this particular chart. That's what I'd be looking at doing. And the reason why, another saying in the stock market, is the bull goes up the stairs and the bear goes out the window, right? Bulls are going up, bear is going down, the bear goes down a lot faster. You can see, look at how long it took, this slow climb up here. But look at how short of a time it took to break back down all the way to this area of November of last year, right? So if it's going to drop, it can drop quick. And so I'd rather be selling like under a 200-day moving average, sell further away from the money with a direction it seems like it's going to go and the downside, and then because I'm okay either way, just like when I'm selling the covered call option. I'm okay either way. If I don't get assigned, I'm totally okay. I'm making money. I just brought in premium. If it expires worthless, I'm going to do it again. If I get assigned, no problem. I'm selling cash secured put options on stocks that pay me dividends, and then I turn around and start selling call options on them. So with that strategy, I feel very, very comfortable that no matter what happens, either way, I'm okay. Now this week, depending on how the charts align, not how the stars align, but how the charts align, I'm going to be looking for some directional trades to the downside. I'm not guaranteeing that I'm going to take anything, because with my lifestyle, work schedule, all these different things that I have going on, I like to be a little bit selective on it. And because I'm having such a good time, easy time selling cash secured put options and then selling covered calls, that I feel like I can afford to be very selective on making good trades that give me easy sleeping at night of being successful. But I'm looking at potentially either just straight out buying put options or doing some put debit spreads. Maybe some of that stuff you don't know what it is. YouTube is full of places you can learn. I told you I was going to give you some free resources, so let's talk about those and how I can help you learn some of those things. I'd like to invite you to go to ihavesuccess.com, and that is a website that I am developing to put all types of content for trading there. There's 4 different things that you can download for free right now. You can download one, all of them, doesn't matter. It's up to you. Anything new that's created after you download anything will be sent right to your email inbox. The most recent thing that I've created has been the cash secured put option selection guide. It gives you a framework of how to navigate selecting stocks to sell cash secured put options on. Another thing that you could get is 3 stocks. Now these aren't the only stocks that I sell cash secured put options on, but these are 3 that I like a lot. And I give you reasons why I particularly have been selling cash secured put options on these stocks for quite some time. And then there's also a stock option Greeks cheat sheet, which is good to start off getting familiar with what the Greeks are. Now, at the end of this video, there is going to be a link to a video called, I think it's sell cash secured, selling put options to generate income, something like that. Doing that, you can kind of bypass understanding the Greeks and could start reaping some profits without fully understanding the Greeks. However, download the Greek cheat sheet so that way as you move into a little more complicated strategies like straight up buying an option or buying some sort of spread, you have a better idea of how to navigate that when you start having a better idea of the Greeks. The last thing, which is my favorite, the 3 underused tactics to transform your financial results. Now, these aren't specifically stock market, stock options related things, but there are 3 things that if you implement, and I know that they work because I have implemented them and I continue to implement them, but I started them a long time ago, continue to do them to this day. They will transform your financial results. With number 3, going to transform your financial results the most, but it is the most difficult to implement. Sometimes that's how it goes. They say the risk reward. Well, sometimes it's the, climb up the mountain, get the best view. So check those out. Also, check the different playlist links and all those type of things. Please subscribe to the channel so that way you can be updated with new stuff. If anything didn't make sense or whatever it is, I look forward to reading your comments. And do me a favor, even if everything made sense, comment, introduce yourself. Let's start having some fun getting to know each other virtually throughout wherever we're at. You guys have a fantastic night. Aloha.